The following is a presentation of TFNN. The TFNN Bull Bear Trading Hour. Every trading day, live at 10 a.m. Eastern. Call now, toll free at 877-927-6648 or internationally at 727-873-7618. The TFNN Bull Bear Trading Hour. Now, Tom and Tommy O'Brien.
Welcome, folks. Appreciate you growling and prowling with us. We have the Dow Industrials right now up 6.
You better talk quick, man.
6 points?
You better talk quick. It's about to hit the red. My goodness. Okay.
Instead of buying the dip, folks, just sell the rip. Nasdaq's up 49. S&Ps are up 15. Gold contract up $7.80, trading at $12.79 an ounce. We get silver up 30 cents, $15.12 an ounce. We're going to get into that silver. We'll see if silver finally got a sign of strength here. Has some price behind it for sure. The oil contract's up $1.47, $43.98. Now that's, I gotta look at that thing, man. That means that went down to.
Can I just jump to it real quick because I have it up and we'll see the live because I was checking it out earlier, man. Jumping around because it was quite a number and it was only about an hour and a half ago. Check that out.
Look at that.
So 8:30, we were down.
42.76.
Yeah,
huh?
and then really you want to you back it up even further. That was the acceleration on Monday, but it kind of hung down there all the way until this is last night, Wednesday. So it was down there at 42.50, but the acceleration right at 8:30, quite a rocket ship, up to 44.41. From there, we're off 60 cents though from that high as well. Volatility everywhere.
You get the note and bond market. 10-year note is up a tick, a 121.14. 30-year bond up 3, 145.17. King dollar up 173 ticks, 96.180. The euro is at 113.98. 1 U.S. dollar. The yen is at 110.49 to 1 U.S. dollar. Now, if we get over and take a look at the small caps, folks, what you're going to see out here is this. And this is the big danger in the marketplace. November 2016 is coming at us, man. And the small caps already got there. You talk about fast and furious, man. So the small caps have been the weakest and actually has led all the way down. But what you're going to see here is pretty dramatic because, you know, first we were talking about the aspect of, okay, the high volume February low. You know, NASDAQ, the small caps went after that bottom line of, well, that's 2 weeks ago, took it apart. And then we started talking about this November number, but it's amazing how fast it got down there, man.
Sure.
You know, the small caps right now, the high of that November bar is 1282.
And that's November 2 years ago. It's plus 16, right?
And we're trading 1279.
Yeah.
Now, if you get over and take a look at the S&Ps, this is where the bottom line is that this is where I expect we're going. And this is what the danger is in the marketplace. If you think that this is a downdraft, which it is, you know, the S&Ps are off 20% from its highs of October. But what you're going to see is that this level here is just like scary. That level there, the top of the level is 2182. Well, it's only 200 points down from where we are. You know, I guess
always a relative term, right?
Well, it is because, like, when you're looking at from where we're down from the week of the 21st of September, we're at 2940.
Yeah, right. No, I hear you.
Pretty intense.
Yeah, that's 525 points.
Let's go look at that silver market. So silver out here, and what's going to be interesting here, that, you know, all the numbers that we go through, economic numbers, right?
Yes.
We're not going to be having those now because the Commerce Department come out and bottom line said that because of the shutdown, there's going to be no economic numbers coming out. Okay. Which is going to be really wild.
Somebody's got to get paid to do them, so I understand. Right.
It's going to be wild for the market, though.
Yeah.
You know what I'm saying?
Oh,
it's like,
sure.
you know, fundamentalists are definitely going on those numbers, man.
Oh, for sure.
Silver. Okay, we caught a bid.
And that relates to more of the energy, right, versus silver. I know we're jumping to silver. You're talking about the EIA numbers. What are you talking about? Are you talking about GDP? You're talking about
retail numbers, housing numbers. Okay. All these numbers come out of the Commerce Department.
Right. No, yeah.
So that we're not going to be getting them. Okay, so silver. Silver, this is good, man. Look at this. What took silver off? Finally.
Well, gold had a nice little
boost. And this is what we needed, yeah. But this is a good sign of strength, man. This is, you got 40,000 contracts. It looks like it's taken out the whole consolidation. Top of that is 1526. I like it. So 1505. This is good. You know, this thing, I want to see it get inside 1545, but This is a nice takeoff. This is what silver needed. Silver's been the laggard in the metals market in a huge way. Well, actually, the real laggard is happens to be platinum.
Yeah.
But, well, silver, the gold's taken off. Gold's gonna do it. So 1284. We hit 1280. You got 111,000 contracts. That's good. That's really good contract volume for right now. We get some action, and that's with, I believe, Europe's closed today. Let me just.
Is it Boxer Day? Is that what?
Yeah, Europe's closed today. Yeah, I heard that Boxer Day too. Yeah,
day after Christmas.
That's the big sales, right?
Yeah.
So let's go take a look at that S&P, because this is so on what day is on Monday?
Yeah.
On Monday, yeah. When we get out of here on Monday, folks, you talk about a bad close. This is something that you hadn't seen in too long. I mean, look at this deep dive. We went from, what time was that? Well, that's 12 o'clock. So 12 o'clock, you traded 23.69, and by the close, they just took this apart, man.
Yeah, 23.40. So you're talking about 29 S&P points in the final 15 or 20 minutes of Monday's half day. Yep.
Right. And if we look at the aspect of what we just did, you did a counter trend bounce up to this.
Yeah. 23.87.
I
mean, we're a full percent off of where we just were. So boom, 1%. Poof, gone.
23.53. Yeah, you get into 23.53, man. We're going to be right back down to the 23.16. 23.16. Gonna blow some minds. It's
a fast market.
That's a big number. So let's go inside the NDX. I heard Amazon come out with some numbers out.
Yeah, and of course they should have. I mean, if they ever come out with a story that says, you know what, last year's holiday season was a little bit better than this year's, the stock would tank. I mean, the way that they're growing, they better be up in their numbers every year. So.
Right. And you know, even with this up $26, folks, this is probably setting up another ABC down. You can see it's, you know, we were up at 14.11. It's already given up 41 points.
Yeah.
And if we pull this back, 1265. Yeah, we haven't hit the 1265 yet. That's the February low.
Sure.
So that's still game. Now watch this. It's not only game. The probability gets much higher, because look at the expansion. Actually, it's an ABC down. So the expansion of volume last week, that's incredible. 47 million versus 27. Now it's an ABC down. Now this is a dangerous ABC down, because your A is 2033. Your B, holy cow, is 1420. So you're talking almost what?
Call it 500 points, basically, to call it easy.
So that's 1278. Oh, that's interesting.
I mean, it's been such a move in the last 4 weeks, right? I mean,
so 1278 is A to B equals C to D, and 1265 is that high volume low. So
yeah, and that C started at 1778, and that's why we're so close already. We're 400 points below that C point. Crazy.
I know, man. It doesn't...
Apple's pretty crazy on the downfall as well. I mean, they're up. They're up like they were up maybe 1% today, but you're talking about, I mean, 40% haircuts. Big numbers. There it is.
Sherman Williams, red paint coming at us. Stay right there, folks. Tommy and I come right back.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow Industrials are up 11. You get the Nasdaq up 46. S&Ps are up 14. And, you know, if we go over to Goldman Sachs and take a look at this for a second. So Goldman, folks, is one of the first equities that actually rang the bell at the highs. I think it was 250.
Nope,
So
more
higher
money.
than that,
More
280.
money. 275.
Yeah, 275. So that was March of this year. You go 275, you're at 152. I know, intense. Now, when you look at this, what you're going to see is that Goldman, is that? Yeah, that's already it. So the buy that we're talking about in the indices that the Russell's already at, Goldman's already taken that bar apart.
Yep.
You know, so November 2016, that rally started. Goldman went from 174 to 220. You're at 152.
Yeah, and it's really crazy when you look at, we are back to where we were in June of 09.
That's intense.
That is really intense.
That's...
For a company like that that's supposed to be dominating Wall Street,
right,
in the wealthiest country in the world,
right,
and they can't have price appreciation on their stock price from 2009.
Yeah, that gets even better.
It does.
Look at this. He just brought it back further. So you're at March of 2006.
Man, oh man. And even crazier than that, we're only, what's the high there? 133.
Yeah.
And that is
2000.
So you know, 133, what is that, 15? So you're about a 10% return over 18 years total.
Yeah, that's trouble. That's trouble in paradise.
Yeah.
For whatever Goldman is
I would
into
agree.
right now. So let's see. And you only get a dividend of 2% at this price.
Right.
Okay. Now let's go to J.P. Morgan.
Yeah, I was going to say, where do they compare?
Yeah. So they're about $20 over the November high, I believe. But
okay.
Let's take a look at it because
it almost can't be worse than what we just looked at.
Right. So this is a monthly that I have up.
Yep.
And what you're going to see is the November area. Oh, $80. That's only $11 off it.
Yeah. Mm-hmm. Just comparing some of these, though. Look at how far. Can we back it up a little bit more?
Yeah.
How far do you have back?
50
or even, yeah, I guess let's
put
go
in
back.
50. 25
at least to get us back to where we were. I mean, different world, right? That's just how
ball.
dramatic it is for Goldman. I mean, you go back to 2009, they were 35. They're almost up 300% versus Goldman.
Yeah.
Barely where they were.
Yeah.
So quite a different number.
No, that is pretty amazing, man.
Yeah. That Goldman chart, man, oh man.
Yeah. And if we look at the whole sector in general, if we take the XLF, let's just see how far that's off.
It's right into it.
Look at that. So
there you go.
Yeah, so the XLF's already there.
Yep.
That says quite a bit, man.
Yeah.
You know, and you know what that's really saying, folks, is that that's saying that rates are going down. That you know, whatever is hanging out here, you know, the consumers definitely spent more money. We should have more money because the gasoline market is beautiful. Do you know what I mean?
Right.
I mean, there's no doubt. If we look at unleaded gas right now, we
had a 42 handle on oil, which is remarkable.
Yep. So you got okay. So look at that, 128.
Yep.
And XB1. If we just look at this in a continuous chart, I mean, this is where we all save money every week, right?
Oh man.
So put this up.
It's got to be good to be an Uber driver when that's happening as well, man.
Yes.
I mean, that's talk about
Big
cost
time.
of goods sold, right?
Right.
They're not, you know, Uber hasn't cut their prices.
No, that's their big ticket.
Yeah.
So we've gone from 228 wholesale in May to 128. Yeah, $1.
Yep. Right. Solid buck right off the top.
That's,
let alone percentage-wise, just a monumental number.
and what's sticking out there like a sore thumb is 113. Maybe they already hit it.
No, I don't think so, right?
124.
Yeah. And it's crazy. I mean, we start getting back down there to those levels, and that's where just to bring fundamentals into it, it just doesn't make sense with oil at $27, $30 a barrel, where we were talking about the comparisons then. I remember that you could literally fill up your pump, you know, and then go inside 7-Eleven, and they'd charge you more for a gallon of water. And that's not going to hold because that just doesn't compute in terms of, you know, because guess what? You go home, and yeah, you might not want to drink water out of your tap, but when it comes to survival, you'll be fine, right? You got water coming out of every single tap in your house, and it's fine. Meanwhile, you're going to 7-Eleven paying more for that water than you are for gas, which basically drives the entire economy. So we're getting to levels, man. $42. We'll see.
Let's go take a look at the GDX out here. So, you know, we got some action out here. Was that the Fed day? Yeah, it must have been. That was a Fed day. You got the higher highs on the 19th, and he gave it up in price. That's where the ABC structure comes up. And the GDX, it's 2147. Now, I don't want that to hit it out here today, because I don't think, well, actually, no, 18 million. We get some volume in this today. That's a lot of volume, because what the GDX does is put big volume in at the end of the day, as does the small caps. That's not a bad showing. And what that is saying, 2051, yeah, this is good. That's over the downdraft of August, man. That downdraft of August, that's the vicious point. That was the next leg lower. And I believe what you have now, folks, when we closed, we had every sector. There wasn't one sector that was in the positive for the year.
I believe that.
That being said, what had happened is that it looks like the gold sector hit lows first and did come off them. I think that's September, yeah, August 15th. XAU, let me just see if that's the number. Yeah, it is. Yeah, but you can see, where do we start? Let's see.
Back it up, yeah.
Yeah, we started.
Oh, right there, it's close.
Yeah, it's getting close. We started at 1307.
Well, that's the high from that bar. It actually opened it if you go back. Right. Yeah, so see, this week crosses it. So it's somewhere in this week.
Yeah.
So it's somewhere in this bar right here.
Yeah, so we need, well, we can do that. We need 25 points between now and...
We might be close to there, though. Just say that opening. Go back to the one bar. Yeah, so the open was 1275, and it closed at 1302. And that was the 29th of December.
Yeah.
So as in, we're within that bar, you know.
Right. So maybe flat for that sector would be, well, flat on anything if you want to see how bizarre these numbers get for the year. Look at those numbers. I mean, the S&P's down 13.3, Nasdaq's off 11.2, Dow's down 13.3. And that's light compared to the rest of the world.
Definitely.
You know?
Yep.
I'm sure Europe's elated that they're not open today.
Yeah.
You know?
Yeah. Let's see what other options that gives you. What's it gives you? Year to date. So let's see, quarter to date.
Whoa.
Yeah, there we go.
Look at that.
Yeah.
Quarter to date, folks, we're looking at the Nasdaq's down 24.4%, S&P's are down 21.2%, and the Dow's down 19.7%.
And the scary one, month to date. Yeah, 17% across the board for December.
Yeah, the stat's pretty scary.
Yeah.
The stat is, this is thus far, the worst December since 1931.
Yeah, right. No, I mean, the stats are staggering, right?
Yeah.
Oh, boy, here's, let's see, 5-day percent change. Yeah, 10% in 5 days, 9% in 5 days, just staggering, yeah.
Big numbers, man.
Big numbers.
And, you know, I don't see anything, I don't see anyone that's going to walk in front of the steamroller, let's put it this way, to the end of the year.
The only thing that really starts jumping out is when you have, Goldman down 50%. I put Apple on a daily today, man. I mean, look at that. 233 to 148.
That's some real money.
That's some real money, and if you're a long-term believer in some of these companies, then we got to be approaching some level. 50% haircuts? My goodness.
They're hodling.
No, they're holding on. Yeah, hold on for D-Light.
Stay right there, Tommy and I come right back, folks.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
TFNN has launched our best sale of the year. The Tiger Dollar end-of-year sale runs through December 31st only. And right now, you can get up to a 40% bonus on whatever you spend on Tiger Dollars. We've doubled the normal bonuses that come with Tiger Dollar purchases. And the best part is, whether you're a new subscriber or you're already subscribed to any TFNN product or service, Tiger Dollars never expire and can be used for any TFNN newsletter or service. We've redesigned the new TFNN website to make using Tiger Dollars as easy as possible. Once you apply them to your account, they'll be used for all recurring transactions going forward automatically, so you have nothing to worry about. For you current subscribers out there, this is a no-brainer. Go get your Tiger Dollars now and lock in added savings on all your subscriptions. Remember, this sale ends December 31st, so get your Tiger Dollars right now before this deal passes you by. And Happy New Year from all of us at TFNN. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We have the Dow up 13, Nasdaq up 57, S&P's up 18, and over at TFNN, folks, we got our end of the year Tiger Dollar sale up. This will be running until next
December 31st, which is, I believe, let's get
Next
it,
Tuesday,
5 days away. Monday. Monday's New Year's Eve, the 31st. We'll run it and we'll bring it down sometime over that New Year's holiday. With New Year's Day is 6 days away, so literally New Year's Eve, 5 days away.
2019 coming at us.
Coming at us fast and furious, man. So right on the front page, You can get up to a 40% bonus. Tiger dollars never expire, can be used for any newsletter or workshop or service at TFNN.com. And you can either spend $500, get $600, spend $1,000, get $1,300, or spend $1,500, get $2,100 for a 40% bonus, $600 bonus Tiger dollars. Current subscribers out there, new subscribers out there, grab some Tiger dollars, and then you apply them to your account, and they get used for any subscription, recurring or whatnot going forward. It doesn't get any easier. And if anybody just has any questions, give us a call, shoot us an email, and it's a pretty simple process. So that'll run through 5-6 days through 2018.
2019 coming up. I just, you know, it's so funny. I mean, what was it, the millennium they call it? 2000? What was that called? I forget.
What's that? What do you mean?
At the year 2000, there was always a
new millennium? Is that what you're saying?
Yeah, whatever it was. But the thing that's so wild is that it doesn't seem that long ago, but it seems long ago, too.
Yeah,
Both. You know what I mean?
It's now almost 19 years ago.
I know. Well,
Yeah.
Believe me, I know.
Yeah. Yeah.
Thank you, Y2K. That's what
Okay,
it was.
that's what you're looking
Y2K.
at.
That's
Yeah.
right. It was supposed to be the end of the world.
Yep.
Y2K. Right. Well, guess what? 19 years later. What was it? 2020? Is the song 2020? The year 2020?
Are you talking about Prince Party Like It's 1999?
No, there's another
Well,
song.
that was another one.
Yeah, no, I know.
Party Like It's 1999,
all these
man.
songs are going to catch up. Let's go take a look at some of the higher volume equities out here. And last week, by the way, too, folks, even on the Monday before the...
So 2 days ago, you're talking about
Yeah,
now.
2 days ago.
Seems like last week.
Watch this volume. That volume on the NASDAQ was huge.
Yeah.
1.6 million for 3.3 hours.
Right. No, for
That's-
half days. And
yeah.
percentage-wise, the biggest Christmas Eve loss by a dramatic fashion, and you're talking about indices had only been down maybe 0.6%,
Okay.
and that was in 1985
Okay.
on Christmas Eve. And it would make sense, right? I mean,
Yeah.
for it to happen on Christmas Eve, who's really at work?
The Grinch.
That's right.
The Grinch came.
You know, we were almost not going to be open. Not really, but, you know, half day, we'll jump in here, right?
Yeah.
You do your show, whatever. But if you're in there managing money, if you're a hedge fund manager, most days you really hope that you don't even got to appear in the office, right? You have your skeleton crew in there taking some
Right.
phone calls.
Right.
Not this Monday, man. Not
No.
even close. You had indices down 2.9% practically, and the record before that is 0.6%. Yeah.
If we go over to, let's go take a look at that Apple.
How about that Apple,
We take a
man?
look at Apple. What you're going to see out here is that this has been a one-way route on the way down.
Hey, they tell the world that they're not going to talk about how many iPhones they're
Yeah.
selling anymore, and from there the fun began to the downside, man.
Oh, so look at it. Just made it, too. Okay, so must have made it on Friday. I mean, on Monday. Made that high volume low. That's 150.24.
Okay.
And now you're under it.
And that's the February
And-
low, yeah.
So 287. Now watch how dangerous this is. So the high volume low had 317 million.
Okay.
Well, we come into it with 287. Now, you know, percentage-wise, yeah, it's not a bad percentage-wise, but I never like to see an expansion of volume like you have right there. You can see the week before you did 217, you did 213. You know, these big weeks, you just stick out like a sore thumb. You can just
Sure.
see it when you're looking at the bar, and that's a problem. You know, because guess what? This looks to me same deal. That's February of 2017, 130. This game. That'd be $100 off the high, right?
Yeah, what?
Yeah. And so the next time they come out with numbers, the 31st.
And before you jump away, how about that number? Remember how...
Wow.
Yeah. I mean, I remember...
699 billion market cap. And it was
Yeah.
$1 trillion market
And
cap.
it was well over $1 trillion at one point, because I believe the number for them to reach $1 trillion was somewhere around 207. And we
Okay.
just said they had 233 or
Yes.
something. So they were way
Right.
above that number. They are now way below that number. But guess what? Their competition, they are as well, man. Because Amazon was a close one. Boom, 669.
Well, they're almost the same.
And they eclipsed it.
Was it Apple 699? Yeah, it
Yeah,
was.
Apple 699. And Amazon, their number was 2,050. They made it by pennies, if you recall.
Yeah, I do. And then let's go to Microsoft,
Yeah,
734.
sure.
Yeah.
Yeah, Microsoft
Netflix,
held up
and-
better than the rest.
I don't think Netflix
No,
is
they're not even
to
close,
that.
unfortunately. Yeah, they're in the conversation
Wow,
as a
that's
yeah.
only-
Well, I mean, yeah, they're not. They might be the growth company, but they're not the juggernaut that a company. How about Google as well? Because they're the one up there in that conversation. Yeah, right next to
Look at
689 about, but they were close, man.
Big numbers.
The high there's, now look at the difference though. The high there is 1273. They're basically at 1,000. We call it 27%. I mean, we just talked about Apple, just went from 233 to 145. Huge numbers, man.
Yeah, huge. And if we go over, let's go over to the Dow, because the Dow, you know, this is really early, folks, okay? You know, bottom line, for basically selling the rip. And they're not wasting any time out here today. No. I expect, you know, coming right into January, this thing, I don't think it's going to stop. I just don't see it. Yeah, we had a question about you know, the negative S&P for the economy. You know, the bottom line is that we haven't corrected in 10 years. So it's like, okay, you get a correction happening, but it's definitely real in the aspect of what people are going to feel like wealth-wise they have. So I expect at some point it will have people pulling back on spending money. It should. They better. I mean, that's if you want to be, you know, conservative. You know, you should basically, if you're depending on money inside the stock market, you better start pulling back something. Do you know what I mean? I
mean, where it starts to get interesting is that you know, the value of those companies. We just saw it, right? We just pulled them up. Now they're worth 650 to 700 billion versus being worth 1 trillion.
Right.
That's the money that they were able to lend against, right? That's the money that they were able to use for their own capital. That's the money they were able to use for their capital ratings. So in that respect, that matters. You know, for sure.
It definitely matters.
Yeah.
There's no doubt. There's no doubt. The real question is going to be how fast do the interest rates go down, I think. And my take on this, folks, I think if you're around us, my take on this is that this dollar is going to fail in a big way. And when I really start thinking about it, I says, you know what? So you got, you know, basically Trump going after the Fed. And, you know, to be real, no president wants rates going up anyway. I mean, but Bush, that's why he didn't win the second election, the first Bush. Rates went up so quick.
There's a lot there, too. Even when I was young, he raised taxes. That's a tough...
Oh, yeah. Read my lips, no tax.
So that's an element in there, too.
So my take is that they're going to destroy the dollar. And they can. See, the Treasury can sell the dollar. The thing that's going to be really cool here, to watch how this shakes out, they don't need the Fed. The Fed can stay there and the Treasury can sell the dollar all day long. And I think that's how the market's going to get out of it after we get down in November. We'll see. You know? Stay right there, folks. Tommy and I are coming right back. We have the Dow Industrials up 15, Nasdaq's up 49, S&Ps are up 16.5. We have gold up 930, silver's up 35 cents. Silver's not stopping. That's a beautiful thing if you happen to be in the metals market. Come right back.
Hi, folks. This is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com. educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow is down 12, Nasdaq is up 41, S&Ps are up 13. Let's go over to our man, Mr. Teddy Cakestad, as we do each and every Wednesday at 40 past the hour. You can check out Teddy every trading day, folks, at Forex-Trading-Unlocked. Teddy Cakestack, what's going on, brother?
Maybe we'll get him, Teddy. I think he just froze up.
Okay.
I'm seeing it.
That's all right. We'll get him back. We'll get him back.
Those gremlins with all the currency action, they're eating up his lines,
there's
man.
lots of currency action, man. There's no doubt about that. You know, if we go over to just like let's go look at the yen right now. We take a look at that yen. You're gonna see.
You're fine.
There
Perfect.
he goes. What's happening, brother?
How you guys doing? Did you have a nice Christmas?
We did, man. How about you?
We're just talking about.
Great Christmas.
We,
relaxing.
We
had way too much food.
We ate for like 4.5 hours in a row.
But yeah, at least, right? Seriously.
Great.
Totally.
Yeah.
So, hey, currencies. What are we looking at here? The yen's at $1.1044.
It's taken quite a hit since our last time that we spoke, right?
Yes.
So I think it's we were talking about the Nikkei plunge too, and that market has, I think, been the major force behind it. And also the weakness in the dollar, too. I think when we talked last, I was saying that it's not so much that you're seeing yen strength or other currency strength so much as it is the dollar weakness. And especially with the interest rates right now, where the market is no matter what, they're pulling the markets back, especially with the short-term rates. I think that's affecting the U.S. dollar tremendously right now.
Yeah, man, they're battling over this August 15th swing high in a huge way. I mean, we barreled underneath it, last week and then popped right above it again, man. It's gonna be. It seems like it's a level
also,
that
U.S. dollar Swiss cannot hold that parity level, and it's going back down towards that 97.5 area. So
okay.
That showed a good rejection there. That the dollar is definitely not strong anymore. It's starting to lose its footing.
Yeah, and I know currencies tend to trend for long periods of time. Is there a number on it when you really break a trend? Is it like a couple months, or it can be? Is there a number? That's my question.
I think right now it's more of just it's like a cyclical turning. So you're going to see it start, like for instance, the pound dollar, because of the turmoil with the Brexit still.
Okay.
It's going to be very range bound. Like no matter how weak the dollar is, you're not going to see a major bullish sentiment towards the pound. Now other currencies, like especially like the Australian dollar, U.S. dollar trade, I think you can see a very big lift against the dollar there for the Aussie. And then also like with the euro U.S. dollar, they have a lot of issues with their budget situations with the multiple countries. But with the weakening dollar, I think you're going to see a breakout with the euro U.S. dollar. And with a major currency like that, that's when you'll start to see the baskets go in tandem with them.
Right. Yeah, it makes sense. I mean, It almost looks like, I was just talking to tell you a little bit earlier that, you know, my take is that the S&Ps are going down further, and it's like the only thing that can really save the market right now is a weaker dollar. So it's like,
Sure.
okay, they'll start, you know, getting that baby going, because as long as you spend the money in the United States, we have the same amount of money. The market goes up again in price. You know, if you're going overseas, yeah, it's going to be more expensive. But
right. Well, that's actually the best thing to help cleanse this rally. If you have a break in the S&Ps over the next couple months, and then you see a very strong weakness, the dollar rather, and strength in other currencies, that's going to help us out, because we need this little flushing, because we've been on a rally that's been in a terror forever.
Right.
You know?
Right.
We need to have a little correction. It's not a bad thing.
Right.
So, you know, if you combine that with dollar weakness, that means earnings should be flush over the next few quarters going into 2019. So then we're going to have the market may be down, but the economy should be strong, the numbers should be good, earnings should be good, and if that's the case, that will support a new rally, a justified rally.
yeah, no, you can see it. It's kind of cool when you put it all together like that, right?
Right.
You know, it's, you know, the currencies, you know, if your head's not wrapped around currencies, folks, it takes a while, but just start one at a time. You know what I mean? You know, because it's you can see, Teddy. I mean, I know that's your bag, but currencies run everything, man. They really do. It's like, okay, you know. I remember when it was Zimbabwe. It was one of those countries that was having a huge inflation, and everyone's trying to figure out at the beginning of it that their stock market's going up so dramatically. Well, what people weren't watching is that their currency's getting destroyed too.
Sure.
So it was just a number. It wasn't what you could buy. You know what I mean? I said, what was the good you could actually buy? Pretty wild. So, I guess when Brexit, I mean, I think we might be talking in here another 2 months that they may have another vote. I mean,
I agree.
You know,
I think it's going to be March before this is really settled, or, you know, maybe on the timeline of being settled. You know?
Right.
At least a few more months.
Yeah, it seems it.
So it's going to be interesting to see this gold rally. If this can keep on going, like we were talking last week about this, you know, is this bull for real? And it really looks like it is. It'd be interesting to see if gold can get back up to, say, like 1,400 level. You know, keep oil down, see what that does for the market.
Now you're talking his language, Teddy.
Well, you know, it's wild. So I was waiting, you know, I like what gold's been doing, trading. I haven't liked what silver's been doing, but today's the day, man. Today, we get 46,000 contracts right now. It has the price spread. It's just launched the consolidation going all the way back to August 15th. And that August 15th day, that was a vicious day, man. You know, so I like what's happening here. When I'm actually looking at, so check this out, Teddy. When I'm actually looking at gold, you know, when I take this from the tops to the bottoms, it's like, hey, this might be the run. You know, we went from, folks, what I'm talking about too, so we went from 252 in gold in 1999. You get up to 1920. You do, all we did is we went back to 1,051. Now that sounds like an insane amount, and it is an insane amount, but when you take this on a long term, that's not an insane amount. That's a 50% retracement of a move.
Right.
And we've been in a consolidation for 8 years. It's like, okay, 8 years. Is that ready to go? And if it is, it's going to be a heck of a move.
Sure.
And every day that I'm looking at, like, thinking that, you know what, they have to destroy the dollar for this to get higher. It's like, okay, that's game. So, we'll see.
It's like quality.
Yes. Yeah, which we didn't have in 2007 and 8. That's what I liked about how this, you know, because what happened in 2007 and 8, folks, is that everything went down because no one had any money. And where this
Everything went red.
I'm sorry?
Yeah,
Everything went red on this.
Everything. It was like, there's no money to be had. And in this case, all these gold equities are trading totally different than they were then. They're buying the equities. I mean, it looks like they bottomed in August to September. Do you know what I mean? So it's going to be weird if we wake up one of these days, but you know, and have gold up $50, $60. And if that's what you get, folks, you'll see a run that will blow your freaking mind.
You keep getting down.
Maybe next year, guys, we'll see gold at 3,000 and Bitcoin at 1,200.
Yeah, and then I'll sell the gold and I'll buy some Bitcoin.
Oh boy.
Yeah.
Hey, listen, I sold gold. I sold gold. Well, at 1,700, I just bought real estate. So that was a really good trade.
There you go.
I was talking about that on the air. House at 300, it was 100. Gold at 282, 1,700. Just flip the position around.
Sure.
Cooking, brother. You have a great one, a safe one. Hey, Happy New Year, man. We're gonna talk to you the day
Thanks,
after New Year's.
guys. Happy New Year. You
Thanks,
too.
Eddie, you too.
Next week.
Stay right there, folks. Tommy and I are coming right back. Dow's up 36, Nasdaq's up 54, S&P's up 19. We'll come right back.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We have the Dow down 68. Nasdaq is up 25. S&Ps are up 4.5. That's quite an expansion on the way down. And maybe just from the story up here, this came out about 20 minutes. Well, no, not 20 minutes. 10 minutes ago. So the Richmond Federal Reserve manufacturing gauge slumped to weaker readings for shipments and new orders. The 4th District Bank factory gauge fell this month, and is the latest evidence that Trump's trade war is becoming greater headwinds for the firms.
U.S. firms.
The Richmond Fed said Wednesday that its measure of factory activity across the eastern U.S. fell to a -8, missing all economist estimates, and the Bloomberg survey projected an increase of 15. So that's pretty levels. Levels greater than zero signal growth. Right. The 22-point drop from the prior month was the most in data going back 25 years. That's pretty intense.
There you go.
So I'm not quite sure whether the machines were reading that, but
and that's just the graph of where it is.
Yeah.
To illustrate.
That's quite a drop.
Yes.
So if we take a look at the S&Ps, these aren't going to hold up.
Let's see. I'm just going to zoom in a little bit for you. There we go. Go for it.
Yeah, you're gonna. Just hold on for the ride, folks. This is going to go right after the lows of... every time we get off the air, man, it's like...
The day is young when we get off the air. We get off the air at 11 a.m., right? We got 5 hours of trading left after our show. But, man, yeah, that high, 23.87. We're now exactly 40 points from that high, off that high. And that is the opening bell. That's not even pre-market. You're talking about that is the opening bell market.
And gold's moving. Gold's up 10.10. Silver's up 37 cents. Dollar's only up 93 ticks. You stay right there, folks. We got our fast market coming up next. And, of course, we got our man, Mr. Basil Chapman, Steve Rhodes, Dave White. Be back this afternoon. We get full trading. It's blowing out trading. Thanks, pal.
Thanks, man.
Go get them, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.